Hey, it's the Pilot's Advisor once again. And on today's episode, we're talking about the recent Fed rate cuts. Do they end the recent popularity of money market funds? We're going to ask Ryan Fleming coming up on today's show. Hey, Ryan, welcome to the Pilot's Advisor again. Today, we're talking about the Fed rate cuts and kind of an interesting little element of that. I mean, it's always in the news whenever the Fed's going to cut rates and all the drama over is it going to be a 0.25% or a 0.5%? Which direction's going to go? Oh, it's going to stay the same. Kind of funny to see the drama that sometimes
It's
happens.
been the story of 2024. Rate cuts, money markets. Oh my Lord, yes.
Yes. Okay. So we're touching a nerve here. So a lot of people, as rates were going up, started seeing money market funds as a viable option. And now there have been articles and some recent commentary that the end of that recent popularity is upon us because of the cuts that have just started to happen and are predicted to continue to happen. So give us some background on why money market funds became so popular. And do you think it's the end of that popularity now?
Well, I think there's a lot of factors that are involved in this. And before we talk about any of it,
Yeah.
we really have to evaluate the time horizon for that money and also your risk tolerance.
Okay.
However, with all that being said, I think that rates were so low for so long that as soon as inflation happened and the cost of capital was up where they had to pay you 5% to get you to put your money into a
Yeah.
quote unquote high yield savings account, it was not never a thing. But then suddenly everyone looks at, oh, I'm getting 5% on my money. And I still look at it as you're going broke very safely because they're only paying you that because they had to. They're trying. That's what the cost of capital is. Inflation was that high. You're still going broke very, very safely at that point. The other thing to consider as rates go up, if you look at the return on equities, they go up too. It's all related to inflation. And so I look at it as a totally relative thing. If you have your money out there that's outside of a retirement account and you want to put it into a high yield savings account, I still think there's better ways. There's better ways to have your money more diversified and let it work for you over the long term. With the caveat, like we said before, what's your time horizon? What's your risk tolerance? But yeah, I can't wait till I don't hear about high yield savings accounts anymore. If I have a client that's 30, 35, 40, and they got their money in a high yield savings account and it's long-term money, I mean, really? And it's like almost like a CD. They still make you? That's still a thing?
Yeah. So it's really the popularity of them was kind of fool's gold. It sounds like people
Well,
were
I
getting
think
all
so.
excited because we were so used to 0% interest rates, or getting 0.2% at the bank or something. That the fact that you can get 5 now in some of these accounts, you're like, oh, this is wonderful. But like you said, it's all relative. But boy, if you had a dollar for every time somebody misunderstood these kind of relative things in the financial world, you'd be a very rich man.
Yeah, when you think about us investing our money, if we're talking about the basics of what we're actually trying to do, yes, we're trying to grow that money, but ultimately what we're trying to do is outpace inflation because we know inflation and taxes are going to eat up our plan over the long haul. So we're really trying to beat inflation. And when you're putting your money into a high yield savings account, you're just locking it in at inflation levels. And so
Yeah.
you're not getting ahead. You're treading water and you're going nowhere.
Mm.
So it's kind of like, hey, I'm flying an airplane and I'm going to turn into that 50 knot headwind. Well, guess what? You're spinning your wheels. So if you really want to get ahead, you got to put some exposure out there and you got to let your money work for you. And that's going to be outside of a guaranteed 5% high yield savings account, especially in those times where, as we saw, interest rates are that high and inflation is a factor right now. And how are you going to beat inflation, not just hang out with it?
Yeah. I want to talk a little bit about your retirement toolkit, Ryan, because these are the kinds of concepts that you're talking about in the toolkit that people can get education about, that pilots can get better awareness of the most important retirement planning factors, right?
Well, absolutely. And if you order my toolkit, you'll get a free analysis. I highly recommend you take advantage of it. I mean, it's free. Pilots like free stuff. Well, guess what? Maybe you think you've done a great job in your 401k over the last 10 years. But why don't we check it out? Why don't we compare what you've done to what I've done for my clients and see if there's a better way? Doesn't cost you anything. seems like it'd be a smart thing to do.
Absolutely. You can get your free retirement toolkit that comes with that analysis, other great educational materials in there as well. Fantastic starting point. In fact, it's the starting point that Ryan recommends to pretty much all pilots to take to begin learning more about retirement and your financial future. Just go to retirepilots.com to order that toolkit for free. You can also find that link in the description of today's show to make it really easy on you. But again, it's the simple address of retirepilots.com. And you'll learn more about Ryan Fleming, the pilot's advisor, while you're at it. And you'll be well on your way to a better financial future with more education, better understanding of your plan, and some of these forces that are happening out there in the economic world. And boy, just learning from mistakes, Ryan, or at least misunderstandings like, hey, 5% or whatever percent money market fund sounds amazing. Not necessarily in 2024. If it was 2020 and you wanted to get a 5% money market fund, you'd have been all about that, right?
It'd be a whole different ballgame for sure. I mean, if the cost of capital was zero, basically nothing, and I could get 5%, we're winning.
Yes, but not the case anymore, as Ryan laid out so well for us. So once again, go to retirepilots.com, get your retirement toolkit. Ryan, thanks for the help today.
Always a pleasure, Walter. I enjoy these special moments that we get to spend together.
Special moments. Great way to describe them. No doubt about it. We'll see you next time, everybody, right back here on The Pilot's Advisor with Ryan Fleming.
Fly safe.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.